Hello, everyone. This is the Vantage RM video update service with the markets here on Monday night. It is 8:47 as I update the video. Here you can see the dashboard. Not much has changed. In fact, nothing has changed. Even with the markets rallying today, they did not change any of the technical strength indicators as the volatility picks up, and that doesn't allow for those indicators to change very much. Nothing has changed as far as our trend indicators, as we still show the corn, beans, and wheat in downtrends. However, we think that they are going to be short-lived. We'll talk a little bit about our longer-term outlooks here coming up in just a minute. Let me remind everyone that starting tomorrow, I'll be on the road through Friday as I head back to Kansas, and we'll be updating from the road here the next several days. Don't forget that Friday is a USDA supply and demand report. The WASDE comes out. However, we are not doing a webinar. And let me just say quickly, the reason we're not is because they changed the time of that announcement. Instead of it coming out at 7:30 in the morning, which allowed us to do a morning webinar and put it all together and give it to you really fresh, it's now going to come out at 11 o'clock Central Standard Time. That's 12 o'clock on the East Coast and Washington, D.C. time. So it is going to be at 11 o'clock, and we're not going to do a webinar at 11 o'clock in the morning. We will talk to you about what we're going to do as far as a live webinar goes coming up, as we may try a couple of things as we figure out how's the best way to let you know what's going on. What we will do is we will have a video update for you that explains exactly what the exactly what the report is and what it said. So we'll have that for you coming out Friday. Again, the report comes out at 11, and we will do a video for you telling what the report is after the market closes on Friday afternoon. Okay, with that said, let's get to the markets tonight. Looks like the markets may be starting to slow down a little bit and get ready for the report on Friday, which could have quite a few changes in it. In the corn market, we're up 1/2 cent tonight. Beans are down 2 1/2. Wheat's up 3/4. And you see the rice market only 17 contracts. In fact, it hasn't traded in almost 2 hours, as it's only down a penny right now, and it has a 1.5 range. So very quiet in the rice. Cotton market currently down 25. Again, very low volume there as well. Natural gas is unchanged. Nothing happening in the cattle market either. It's down 30 in the February cattle, with the Dow down up 4 as far as the futures goes. We're up $2.70 in the gold market, currently down 44 points with the dollar, and crude oil up a nickel. So there's nothing happening in the outside markets, and nothing happening here either. Let's take a quick look at the markets and how they look today, and then I want to just show you a quick spreadsheet. This is the corn market today, and you can see we did do a hook reversal up. We talked about that, and it rallied right back up to that mathematical downward trend, which continues to be holding things in place. Notice the strength of the trend continue pointing higher. There's been no change in any of our indicators here. Market still looks like it's in a downtrend. Obviously, there's some you start to think about it when you start to see some reversals, but we could see several reversals here before we finally put in an intermediate low, and we think the market could have a chance to rally into the spring, but we'll show you what it's up against here in just a minute. In the soybeans, we're down 2 1/2 cents, had a nice run up today, but again, it never even got out of Friday's range, so it's still range bound in Friday's key reversal down range. The low was today was higher than the low on Friday, and the high was lower than the high on Friday. So we had the low higher and the high lower, and that's what's called an inside day. And again, notice we're right against that mathematical downward trend, and we do have the strength of the trend high enough now that it does qualify as a leg to the upside. There is a little bit of a warning, though, and that is because the strength of the trend is now stronger than the actual strength of the lows. So that's just one of those things we start to look at, and it too, just like the wheat here, says that we could be coming up against a little bit of a change in direction. Notice the strength of trend, very solid. For you new subscribers, this tells you that there's a trend underway. It's a major trend. It's solid. It's in place. and as long as that line keeps firing higher, that tells you that this market is still working up. The highest I've ever seen this number get to is about 63% in the wheat. I think it was 61. So we got a ways to go to get to that level, but we do not expect that kind of a high in this particular situation. In other words, we don't expect that strength of trend to get that strong. We also have another indicator that tells us that we are probably within just a day now of a low setting up. That means that this low that we had back actually on Friday could end up being the low that the computer is spotting and saying that that the odds say that we're going to get a little bit of a kick up here in the wheat market. It's also possible we're going to go into an expansion phase, and that is because you see percent bullish. It's right here at 20%. That number dropped down under 20%, and the market now has rallied back up. So this low becomes critical. If we take out that low, then that indicator is going to roll back over and say, well, instead of doing a normal low here, we're going to do an expansion phase low, and that could mean a stretch towards the $7 mark to the downside. So there could be some push still here in this market. However, if we move above the 765 level, 760 level, right up into that range, it is probably going to start turning this indicator down, which would tell us that this leg has come to an end. So that's what we're up against here over the next couple of days as we head into the report on Friday. In the rice market, we're down a penny right here tonight. Market was a little bit lower today. It's still connected to that mathematical downward trend. There's no change in this situation. All I can tell you is that the strength of the trend is low. It's below the 23% level, and so we really do not have much of a leg established at this point. Market's still sideways, and you can see here that's exactly what you have with the two lows here, the two highs here, and now that low has been tested and we've bounced off of it. So we remain sideways as far as the rice market is concerned. March cotton has had some trouble here the last couple of weeks as we've had a move to the downside that has now moved away from the mathematical upward trend. Bollinger Bands are coming together. We have an acute angle problem right here. That is type of a quadratic top, but this is really more of an acute angle issue. And notice the strength of the trend screaming to the downside, saying that we don't have a trend here. Overall, as you can see, if you come back and look to the left, this market remains sideways, and that's how we've been calling it for some time. Real quickly, I want to show you the supply and demand situation in the corn market, and we'll wrap this up. Before I show you that, let me show you first of all the Vantage RM price outlook as we've developed it here for the next about 3 months. As you can see across the top here are the different reports and events that we have coming up. We have the January 11th report, which of course is Friday, the WASDE report coming back out on February the 8th. Then the Outlook Conference in Washington, D.C., which is February the 22nd, 23rd. There will be some news from that. The WASDE report then comes out again on March 8th, and then planning reports coming out March the 31st. So this gives you the first quarter, and it kind of gives you a view of what our projection prices are as we look at it going forward. Here's where we currently are in the market. This is using the July futures at $6.74. And what we're looking for with the July is actually around $6.80 at the moment. But this is close enough because what it shows you is where we think the prices could go here over the next couple of months with the report. If it's bearish, you can see what we think could happen to prices as they could slide. But we think we're going to run into some problems with the market being able to dip a lot lower. And you can see also these dotted lines here, which represents the lower end of the USDA average price. And you can see we are trading against that lower end right now. Now, don't start to think, well, that means we can't go below that price, because we certainly can. However, we've got a lot of corn sold at higher levels that have to be averaged into that as well, and so we think it's highly unlikely we're going to go much below that particular level. These gray areas down here are as if the weather gets just absolutely perfect and we start to see an early planting start to happen mid-country and then starting to go up the country, then that's going to become a discount. And if we start to see dry weather come back and there's all kinds of problems, then all of a sudden we're going to see some weather premium, and that's added on this side. So that gives you just a little bit of a picture. What we think is going to happen, the market's going to stay flat into the January 11th report. We think it'll have a little bit of an upward bias. It could shoot down right after this report, but we think it will have more of an upward bias into the February WASDE report with the market rallying into the spring. Once we get into the spring, if I did this on a yearly basis, which we will do at some point, you would see that I become pretty bearish after we get into the April time frame. Why do I get that way? Just look at this. What you're looking at now is a spreadsheet of the supply and demand that we've had since 2009, and here is 2012-13. This is the year we have right now. This is the report that will get changed on Friday. But what I wanted to do is just move into the 13-14 and give you three different pictures. One picture assumes that we have the lowest yield that we've had over the past 5 years. The other one is the highest yield over the past 5 years. And then what we do is we pick up and we start doing some of the changes with the demand to use the highest levels of demand in all the categories. And if we start to do that, you can see that the carryover number would only be 715 million bushels, even with a 99 million acre planted that number of acres planted in 2013, which is what everybody's talking about, and we have the normal percentage that is actually then becomes harvested, and we have the high yield of 164.7. If you increase the demands back to where they would be with the low price, you can see that we still have a very low carryover. If we use the lower end of this and then use the higher numbers, you can see it would be a negative. Well, we're not going to have a negative, so this column becomes pretty much a nothing column. But when we move over to the averages, what this does is it says here are the averages, the average yield and the average uses for the last 3 to 5 years, depending on what category. By that I mean, if you'll notice here with the ethanol, we're not going to be below 4.5 billion bushels, so I didn't go back that far. I just went back and used the lowest number in that end. But on the rest of it, I used just the averages. And you can see then we have a carryover of 1.7 billion bushels. Well, it's going to take a lower price to increase the demand. And that's why we get a little bit bearish for the market after we get through with the March-April time frame. We're going to be bearish. Whatever we're going to get in this market coming up. But one thing to remember is I had somebody ask me, well, should we be selling December corn yet? The answer is no, and the main reason is because if you look, you'll see that we're only 85 cents a bushel off the high. We may be a couple, $3 off the high in some of these markets, but not, and that's all in the old crop. And when you get to the new crop, we're not even close to being that far down. I think in the corn, we're actually about $1.50 to $2 off the high, where in the December corn, we're not even $1 off the high. So we think we still have a chance to get some better prices to do some locking in, and we'll do that probably coming up as we move into the spring time frame. It's going to do it for tonight's video. We hope you have a great Tuesday. I'll update the tape or update the video for you tomorrow and comments tomorrow on the road, and we'll talk to you then.